In this video, you're going to learn how to use a trailing stop loss, when to use it instead of a normal stop loss, and why professionals tend to choose to trade with trailing stop losses in many instances. This video is not financial advice. If you are looking for specific financial advice, please contact a financial advisor in your area. Now, I want to show you this, and this is for the people who have not already signed up for Moomoo and do not have access to this tool, which can help you tremendously in having control over the options and stocks that you are trading. So if you go to the video and you look in the description, you'll see it says here, get free stocks with Moomoo. If you click on it, what you'll see is it'll open up to a link and there'll be a promotion going. Right now it says join and you'll get up to 17 free stocks. You open an account, you deposit $100 or more into your account that you will be able to trade going forward. Now that you know how to get to it, let's first talk about how to use a trailing stop loss on Moomoo. And then at the end of the video, I'll explain to you why people use it in specific circumstances. So if you already have Moomoo and you've already signed up and everything, this is what I want you to see. And this is what the instructions are step by step for how to place a trailing stop loss. So at the bottom of the screen, what you're going to see is this. It says watch list, markets, trade, many other options. You're going to click trade. And then what will pop up is at the very top, you'll see it say trade. But what we are looking for here is the search bar, because we have to find a stock or an ETF or an equity that we can trade with so that we own it. And then we can put a trailing stop loss on it to protect us so we don't take too many losses. So now let's go forward and let's see. Where it says trade, we have to click this search bar and we're going to look up ticker symbol SPY, the SPY. Now, I type in SPY up here and then I see it pop up. SPY, it says SPDR, S&P 500 ETF. I click on that and then this pops up here. It gives me a detailed quote or a look at the price of SPY right now and some pieces of information. How high was it today? How low was it today? But what we are going to do is this. We are going to go to the options. Do you see how it says quotes here? And it's highlighted in white. We're going to highlight this options so that we can see options instead of just the stock itself. Now, once we see options, we want to make sure that we are on options and then chains. And remember, the SPY, when we looked at it, it was $398 US. So what if we thought or had good reason to believe that it would go higher in the future? We might then go and buy a call option. So if we did this and bought a call option, we would have to pick a date. So again, we go to the options and we go to the options chain. And let's say that we picked a date in this example right here in March, right? We pick a date in March and we have to scroll through and look, because we're looking at the calls, right? You can look at all options. You can look at call options, which we are looking at, or you can look at put options. But now we're looking at calls. So options, chains, and calls. We are looking for, in this instance, the $400 strike. If you don't know how to trade options, I'll teach you how to trade options in the Discord. You can sign up. Again, the link is in the description for that. And I'll teach you through my classes how to trade options. So now check this. We have the $400 strike, and we could click on that, for example. And if we clicked it, it would highlight. And we could see the price. At the time that I took this screenshot here, the price is right here in red. So what we want to do, and I changed the date to March 31st, 2023, because this is the date, let's say that we thought it would go up to 400 before this date. Okay, now that I'm in there, as soon as I click it, the thing that I highlighted here, as soon as I click into here, we can see the bid, which is what people are trying to buy it for, which is 6.77. And we can see the ask, which people are trying to sell it for, which is about 6.79, right? So now with that being said, what we're going to do is, again, click on it. It'll open up. Now, in this case, we are about to buy an option so that we can go and put a trailing stop loss on it after we own it. Remember, that's huge. After we own it, we can put the trailing stop loss on it. So notice, you have to understand the list of items you're looking at. The order type, the price, the quantity, and amount. So we're going to have to change some of these things when we get to our trailing stop loss portion. But first, you can't put a trailing stop loss on it until you buy it. So look at this. It says the price right now, when I took this screenshot, is 6.77. How many of them do I want? I can click this plus or I can click this minus, and I can say, you know what? I want to just buy one. So now that I can buy one, it asks me, okay, is this amount okay? To buy one, it's going to cost me $677 to buy one. So then I would just click buy. And after I purchased it, when I go back and I look at my assets on Moomoo, any stocks that I own or any options that I own will all populate in the same area on the Moomoo app. So now that I see this, since I just picked it up and the execution price that I got it at was $6.74. And notice I bought it at $6.74. It's currently worth $6.74. So I am at break even. I'm not up on it. I'm not down on it. It's at 0.00. So now that I own it, I have to go and put a trailing stop loss on it so that I can avoid unlimited risk in this case. So let's see this. When I click on that option that I own, and again, right here, or I wouldn't say unlimited risk, I'll say a total loss on this option, right? So to avoid that, I want to put a trailing stop loss on it. So let's take a look at this. This is what the option will look like as soon as I open it up. So we can see that it says SPY, the year, the month, and the day. So SPY, 23 is the year. What month? 03. March. What day? 31st. And what is it? It's a call. And what is the strike? That 400 right here. So we can see that the current price is 6.74, again, where I purchased it. So I'm at 0. And what I want to do is actually go and sell it. So I'm going to go down to here on the bottom and click trade. And now this opens up. Now that this is opened, what I want to do is change my order type. Notice this before we do anything else. Notice how it says max quantity to sell is 1 because I only own one. The max quantity that I can buy with the cash that I have in my account or the margin is 6, but I want to sell this one, but not right away. I want to put a trailing stop loss order on it. So let's take a look. It says order type, limit. I need to change this to a trailing stop loss. So if I clicked on this arrow right here or anywhere on this row, this would pop up. Order types. Right now, you see how it's checked right here and it says limit. I want to change my order type from a limit all the way down here to number 8, which is my trailing stop. So I click on that and then this changes. So notice, and I'll go back and forth so you can see this well. Before, my order type was a limit. Now, I go here and I click limit. I change it to trailing stop. Now my order type is a trailing stop. And it's asking me ratio. By ratio, they mean percentage. So with this being said, that means that we have to then say, what percentage of a drop would I like this to kick me out if it was to happen? So naturally, I'll go with a 10% stop loss. You can go with 5%, 1%, 50%. You can choose. But for this example, I will go with a 10% stop loss. So I can click this plus button right here or minus to change the numbers, or I can just, I can click into it and click the number 10, 10. And how many of them do I want to sell? Remember, the max that I can sell is right here, which is telling me I can sell 1. So then I'm going to click this plus. And then, you know what? I get it to 10. So let's take a look. My trailing stop loss, what ratio? 10%. So this means after any 10% drop from a peak or at any point, the option price drops 10%. So in this case, if it drops $67, because the option price right now at the time of this screenshot is currently $670 in value. That's what this means up here. If it drops $67, which would be 10% from here, then it would kick me out. So let's see. Trailing stop, ratio, 10%. Again, I could press minus and change it to 9. I could change it to 5. But for now, keep it on 10. I want you to see something. Once I click sell, because remember, the trailing stop is a sell order. Once I click sell, then this trailing stop order will populate here in my open orders. It's an open order that's just sitting and waiting in your account, but I can't see it. Where did it go? You see where it says pending right here? I would click on this pending, orange pending word here, and you see there's a drop down. Once I click on that drop down, this would populate. And it says, look at all of the orders that are open, the submitted ones, the pending ones. What I want to see is all of my orders. So now I can see my trailing stop. I'm looking at my open orders, and I'm looking at all open orders right here. And I can see that I've submitted a sell order, and it's going to trigger at the market price if it drops 10%. If the stock or option or anything that you picked up, bought, or it triggered after a 10% drop, because that's what I set it to. But let's say that I want to go and change this order because I'm thinking, you know what? I want a 5% stop loss or even a 15% stop loss. But let's say I want to update it because right now it's on 10. So I'll click on this order right here. I'll click on it, and then this will open up and it'll show me what it is now. So I can see that I have my 10% stop loss on. I can see that I sold one, right? So what I can do is I can manipulate this minus or this plus here and then change it. So right now it's 10%. I can change it, and I'm in edit right now. And I do want you to see that. So once I click it to change it, it'll ask me, do I want to just look at the quotes? Do I want to edit? Do I want to cancel it totally or look at the details? So I'm going to click edit. So once I click edit, then at that point, I can now click minus, I can click plus, and I can change my stop loss to whatever I want. But for this example, we're going to change it to 5%. So I'm on edit in my option. It's a trailing stop order, so it's locked in. But my ratio is now 5%. So if at any point the option price drops 5%, it's going to trigger a market order to kick me out of it. So now I can go to sell, and then that would be my new order. Now, after we have that done, as soon as, again, at any point it drops 5%, it'll kick me out. So that's how you do it. You click sell, and then this will populate again in your orders, your open orders, where you click open orders, and then you change it from pending to all, so you can see it. You can see that order. And like I said before, if you click in here, then this will pop up. If you click here, this pops up, and you can edit it and change it all you want. So now that you see how it's done, put a 100 in the chat, put a 100 in the comments if you appreciate that detailed step-by-step tutorial on how to do the trailing stop loss. But now, for my people who are newer at this, I'll show you why people do a trailing stop loss, but I wanted to just show you how first. So let's look at this. Think of a normal stop loss, kind of like a cat, and think of a trailing stop loss, kind of like a dog. So cats, they don't follow you around. They just sit there and they'll do whatever cats do. They're not interested in following you around. They just stuck. A dog, on the other hand, will follow you around. So cats are like a stop loss, a normal stop loss. Dogs are like a trailing stop loss. Remember, trailing because they are following something. They're trailing something. So let's take a look. A stop loss is used to literally stop your losses. So something is falling, and it's supposed to catch you and take you out of the descent in price of something that you bought or something that you've purchased, whether it be an option, a stock, or anything. It stops your losses. So let's take a look at a normal stop loss. And again, normal stop losses are like cats. They don't move. They won't trail. They won't follow. And let's see how that looks and how that works. So there are 3 zones here, and we're going to look at the expected reward. If you get into something and you want the price to go up, you buy a stock, you buy an option, you want the price to go up. So you buy it here. It says buy at this price. You expect it to go higher and higher and higher. However, you don't want to lose all of your money. You want to manage your risk appropriately. So you say, you know what? I'm willing to use or actually lose a small amount in order to take on this stock or take on this option. I'll take some risk. So then you have what's called the acceptable risk zone. Now, you do not want to lose any more than you are comfortable losing if you get into a trade. So then you use a stop loss or a trailing stop loss. So you can do what? Avoid loss. And this zone here is the avoided loss zone because you would have gotten kicked out after it fell below that level. And then if the stock or option price kept falling, then you know what? It doesn't matter to you. You're no longer in it. Your position has been closed because of your stop loss. Now, again, this is the normal stop loss, like that cat that we were talking about before. And let's see how it works. So the stock price is moving up, 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 up. You feel as if it'll go higher. So then you buy it at this price. It goes a little higher. And you know what? You say, I'm going to set a stop loss, a normal stop loss, one that won't move and won't trail. You set it at your acceptable risk level right here. So if at any point the stock price was to fall down and then hit your acceptable risk level, it'll kick you out so you can avoid further losses. Let's add numbers here. Let's say that you were to buy it here, an option. It costs you $100. Follow me on this. It costs you $100. And then the price went up to $110. And you put a stop loss at $90. So if at any point this thing comes down to $90, you know what? You put your stop loss just like a cat. It's just sitting there and it's waiting. It's an order. It's a sell order. And it's saying, you know what? I'm going to sell this. I'm not going to move, but I will sell this if this hits $90. You bought at 100. If it hits 90, I'm out. It goes to 110. It comes back down, 95, 94, 93, 92. You think it's about to kick you out at 90, but it doesn't hit 90. It keeps going up, 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 past 100 again. Oh, it's 110. It's 120 now. But then it starts to come back down. You know what? It's at 110. It goes to 120. It goes down to 110. It goes to 95. It goes down to 90. And it kicks you out. But you've avoided further losses. This is a stop loss, a normal stop loss. It never moved. It never changed. It was always at that 90 unless you manually changed it. So now let's go and look at the trailing stop loss and how this works and is different from a normal stop loss. The normal stop loss will not move unless you move it yourself, just like a cat in this example. But again, just like a dog that will trail and follow, the trailing stop loss is following the price of the stock or option moving. So there are three parts here that I want you to see. The yellow line is the stock price as it moves. The dotted blue line is the trailing stop loss. First thing that I want you to know is notice how the trailing stop loss moves almost in parallel with the stock price. So as the stock price moves up in yellow, the trailing stop loss moves right along with it. And let's go through this example. Now, this example is using numbers like 8,000. It's using numbers like 9,000, but it could have easily been $8. It could have easily been $80. It could have easily been $800 because the math still works out the exact same. So let's use their numbers for simplicity's sake. It says right here, let me just blow this up a little bit bigger so you can see it. Your entry price on an option or a stock, for example, and remember, it could have been $80. It could have been $8, but they're saying 8,000. You get in at 8,000 and you put your trailing stop loss for $500 drop. If it drops 500, it'll kick you out. But remember, this isn't like a cat that won't follow. This is the trailing stop loss, like a dog that will follow the stock's price or the options price. So it's waiting for a $500 drop at any point. You get in at 800 or 8,000. Now your trailing stop loss is set to 7,500. But you know what? It doesn't drop. It moves up to 9,000. So then what? What happens to your trailing stop loss? Your trailing stop loss moves on its own to 800 or 8,500. So it used to be 7,500. Now it's 8,500, but you didn't have to do anything. It automatically did it for you. It's trailing the price action. So now the stock price is 9,000. The options price is 9,000, let's say. If it drops to 8,500, it'll kick you out because that's a $500 drop. But what if it comes down to 8,700, a $300 drop? You know what? It didn't drop 500, so it won't kick you out yet. It continues up again. to 9,500. And you know what will happen? Your stop loss moves to 9,000. Why 9,000? Because if the stock price or options price is at 9,500, your trailing stop loss is following it up and just waiting for any $500 drop, because that's the condition that you set in the beginning. So now it goes up to 9,500 and you're wondering, what if it goes to 1,000? But you know what? You're not going to take the risk. You have your trailing stop loss on. So then it starts to come back down, come back down, come back down. And look, when the price falls to 9,000, the stop loss, the trailing stop loss, in this case, would be triggered, and it would close your position and sell out at that point. Now, the difference is, notice how the stock price, or again, options price, went all the way from 8,000 to 9,500. If you had a normal stop loss on this one, it would only kick you out at 7,500. 7,500. It would never follow it. But your trailing stop loss is following it up so that you can take profit at a higher point, and it's more automatic than having to go and readjust your stop loss. So that is the end of this video. In the beginning, you can see exactly how to do it on Moomoo. And now you can see why people choose the trailing stop losses when they have that option over the traditional stop loss. And Moomoo is one of the services that actually offers the trailing stop loss for not only stocks, but for options as well. And this is why many people download it. Again, the link is in the description. I love y'all, and I'll see you in the next one. If you appreciate this video, put a 1 in the chat so I know to continuously make more step-by-step, easy to follow instructions that teach you more of the stock market and how it works. Again, I'll see you in the next one. Take care.